Welcome to Invest Tony channel. On this channel we talk about investing, markets, inflation, economics, financial literacy, and why it is important to educate yourself. The only reason for this channel to exist is my willingness to share my knowledge so you learn off of my mistakes and avoid making your own mistakes. This is a video where I'm going to be talking about Bitcoin. By now you probably already heard about Bitcoin, but do you understand how it works? Or rather, can you explain how it works? So this video was designed for somebody who has zero or close to zero knowledge about Bitcoin, but probably will be interesting for somebody who knows a little bit. Maybe you'll learn something more, or at least I'll debunk some of the myths which you might have heard, overheard, or didn't understand quite how it works. Also, if you know everything which I'm going to be talking about in this video, feel free to share it with somebody who you want to learn about Bitcoin, because you might understand how it works, but sometimes it's difficult to explain. I promise I'll try to keep it as simple as possible. I'll be trying to explain it as I'm talking to a 5-year-old, and I'm specifically not going to go into technical details. We're going to be talking simple terms and relevant information. So, long story short, Bitcoin was created in 2008 by Satoshi Nakamoto. Nobody knows who it is. It's a person, it's a group of people, a government. No one knows. There are some myths, some legends. Some people say it might have been halvening. Is a very interesting person, a developer. Unfortunately, he passed away, but he is very well known due to his famous tweet, a very early tweet. He just tweeted running Bitcoin. So some people think that he might have been Satoshi Nakamoto. If you're interested, you can look into this theory in depth. I just shared this because I thought it was cool. So let's talk about some features and characteristics of Bitcoin. First of all, Bitcoin has finite supply. There will be ever only 21 million Bitcoin maximum. Why is it important? Because the current money which we all use in different countries, euros, dollars, yen, and all the other known currencies are fiat. What does that mean? It means that they are not backed by anything, just by the faith of people. The people believe that $100 is worth $100, right? Otherwise, it's just a piece of paper with some signatures and pictures on it. When, let's say, gold is a metal which you cannot print, you have to mine it, you have to apply some force, you have costs to mine gold from the ground, while the paper you can basically just print, you can press a button, and there you go, there are more dollars, more euros. And we've seen recently, past 2 years, was tremendous amount of fiat currency injected into our economy. So because of that, we have huge inflation, and there's no way to deal with it. That's why there was a bull run in the stocks and cryptos. So the opposite of infinite, there is finite supply of Bitcoin. Right now there are a little more than 19 million Bitcoin has been already mined, and there are so less than 2 million Bitcoin to be mined. Even though it's taken only 14 years to find this 19 million Bitcoin, it'll take over 100 years to find the rest of a Bitcoin. And why is that? We're going to be talking later in this video. Also, I'll be talking about what happens when all Bitcoin is mined, and what will happen then, what happens to the miners and all that stuff. Note, you always say Bitcoin, you don't say Bitcoins, it's Bitcoin. Just, an interesting fact for you. So, you probably heard about Bitcoin mining. I'll explain very briefly, very simply how the mining works, but before that, you have to understand what is Bitcoin and why it is interesting. First, you have to understand what is Bitcoin and why it is so innovative. So Bitcoin is peer-to-peer cash, meaning you can send a Bitcoin from one person to another person just as you would pass cash, right, as a bill note. They're without intermediaries, so there's no bank, no third person who has to approve or deny your transaction. It just goes from here to there. So Bitcoin works on a system which is called a distributed ledger. You can think about it as a spreadsheet, right? Excel spreadsheet, where there is a transaction. A send this many Bitcoin to B. B send that many Bitcoin to C. And that is distributed between all the computers which are running Bitcoin node or Bitcoin miner, which are not the same thing, but for the purpose of this video, let's say it is the same. So the computers which are running Bitcoin node, they have all the blockchain. What's blockchain? It's a chain of blocks. So the block is one spreadsheet and they all connected in one chain. Every following block has a little code from a previous block, so that way they know the chain is connected. And every single block there are a certain amount of transactions which happened for the past 10 minutes. Every new block is found on average every 10 minutes. How is it possible? We're going to be talking a little later. Why always 10 minutes? But what you need to know for now is that if you send Bitcoin right now from A to B, there will be a transaction. And you have to wait for your transaction to get into a block. So once your transaction is in the block and the block is found, then it goes into blockchain and you get your confirmation. Sometimes when you send a Bitcoin, it says 1 confirmation, 2 confirmation, 3 confirmations. That's how many blocks passed since the block with your transaction. Now, how do the transactions get into blocks? That's where the miners show up. So what do miners do? They run a miner's program, software, on their supercomputers which are designed to mine. So what do exactly they do? They have to solve a cryptographic puzzle, which is quite unique one. It's very difficult to solve it, but it's very easy to check it. So the only way to solve this puzzle is basically a string of zeros, and you have to find the answer to this puzzle. So what computer does is 0 0 0 0 1 0 0 0 0 1 0 and keeps turning really quickly to find the answer. And once he found the answer, he puts it back into the equation and he knows it's right or wrong. If it's wrong, then keeps doing it again. And then if it's correct, then there you go. The computer just solved the cryptographic puzzle, and the first computer who solved this puzzle gets to write the transactions into the block, and also being rewarded in Bitcoin for finding this block. Once the correct answer is found by one computer, it immediately spreads through the internet and shares his answer with all other computers participating in mining. And all the other computers are taking his answer, plugs it in the equation and see if that's the correct one. Then they take his answer and start searching for another block. So the winning miner, the one who found the answer, gets to write all the transactions which happened in the past 10 minutes in the blockchain and start searching for another one. Right now in 2022, the mining reward, the one which miner would give if he solves the puzzle first, is 6.25 Bitcoin. Back in 2008, it was 50 Bitcoin. How is that possible? Now we're going to be talking about two coolest features of Bitcoin. So far you probably already understood more or less, I hope, how the mining works and how the distributed ledger works. So it's very transparent, right? Bitcoiners have a saying, don't trust, verify. Why is that? Because first of all, you can see all the wallets, how much Bitcoin have this wallet, how much Bitcoin has that wallet, and you also can verify the answer to the cryptographic puzzle, right? So if one miner found this, shares with another one, and the other one verifies and then accepts it if that is correct. So now two cool features of Bitcoin. First of all, first one is known as halving or halvening, depends how you want to pronounce it. What it is the halving of the block reward. As I said, in 2008, when Satoshi just started running his first Bitcoin node, and then his friends and early adopters supported him and turned on mining equipment, mining software, they were being rewarded for the blocks, as I said, 50 Bitcoin every 10 minutes. Great time, right? and there was much competition because it was just Satoshi and a bunch of cyber punks who were back in the days just interested in this kind of stuff, and it was an experiment. Nobody ever thought that Bitcoin will be big as it is right now. So 4 years after that, in 2012, Bitcoin had its first halvening, and it's all hard-coded in the Bitcoin code, which is beautiful because Bitcoin code is open source. Everyone can go ahead and read the code. It's not hidden somewhere. It's not proprietary like one of the corporations like Google, YouTube, Apple. They would write their software. They would hide it behind the bars, and they don't want anyone see what they're doing there. Bitcoin code is there for you. You can go ahead, knock yourself out, and read it. So it's hard coded that every 4 years. It's not written in time, it's written in blocks. So every I think 165,000 blocks, if I'm not mistaken, but on average it averages out in 4 years. So every 4 years Bitcoin reward is being halved. So in 2012 it was halved from 50 to 25, then in 2016 it was halved from 25 to 12.5, and now 2 years later in 2020, 2 years before, in 2022 Bitcoin had its third halvening and it was cut in half to 625. Right now in 2022 the block reward is 625. Guess what? In 2 years, in May, approximately in May, maybe late April, maybe early May, maybe middle May, what's gonna be the block reward? Congratulations, you got it. It will be 3.12, whatever. So 625, cut it in half, and this will continue further. Infinite amount of times Bitcoin block reward will be halved. That's why it will take 100 years to find the remaining 2 million Bitcoin, because geometrical progression, that's how it works. You can, it's hard to believe, I understand. Go ahead, use a calculator, use Excel, check, and you will realize that 19 million Bitcoin was very quick to find, and 2 million Bitcoin will be very slow to find. Now, the second cool feature of Bitcoin, and it's critical, I like it even more than a halvening, is difficulty adjustment. This is insane, and it's also hard-coded in a Bitcoin Core software. What is difficulty adjustment? So back in the days in 2008, when Satoshi just started running his Bitcoin node, of course the computers were way slower, way weaker than they are right now. So the cryptographic puzzle, remember, the one the computer has to figure out before it gets to write all the transactions into the block, was relatively simple. You could have mined your Bitcoin on your laptops. Bitcoin network knows how many Bitcoin miners are working right now. So this combined power of all the computers participating in mining is called hash power or hash rate. So if, let's say, there are 1,000 computers and they each one of them has specific characteristics, that combined their power would be this much hash rate per second. So back in 2008 the hash rate was relatively low. Right now, as you could have imagined, is super high. You cannot even compare the older computers with current miners. So why didn't we just solve this puzzle real quick and be done with this, and no waiting 100 years, just mine it real quick and go? You cannot do that because Bitcoin code is adjusting to the power of the network. The more computers are mining, the more difficult the puzzle becomes. The less miners are working on it, the less computers are plugged in the network, the easier the puzzle is. Great example was, I think last year was it, when China banned all the Bitcoin miners. So the miners literally almost overnight, realistically it was 1 week or 2 weeks, they had to shut down their miners. And China was huge mining operations. It still has like 20% of all hash rate, but it was close to 50, if not over 50. They had to turn off their miners. So theoretically, it should have become very difficult to solve the puzzle because half of the network basically disappeared. But Bitcoin has an adjustment mechanism. So what it did, it dropped the difficulty of the puzzle. So the remaining computers were still, they wouldn't struggle so much with a super difficult puzzle. They still can find it on average. They can solve it 10 minutes, once in 10 minutes. Can be quicker, can be slower. Sometimes you would see 2 blocks coming almost immediately. It just happens so that one of the miners found the block real quick. Or maybe it's about 12 or even 15 minutes. But on average, it's always 10 minutes because the network knows exactly how difficult the puzzle is and how many computers are mining it. Every 2 weeks, the Bitcoin network adjusts to downside or to the upside. Interesting fact, when China shut down their mining, there was 4 periods, so 2 months, Bitcoin network was adjusting to a lower number, so difficulty was dropping. Right now it's at all-time high as we record this video in May 2022. So there you have it. Now you know what Bitcoin is, how does it work, what's so cool about it. Remember, finite supply. How it's been mined, what the miners actually do, and also mind you that it's very expensive to mine because you have to burn electricity to run these machines non-stop, and then machines consume a lot of electricity. The miner, like up-to-date miner, would probably consume about 3 kilowatts an hour. So imagine, and the mining farms, they have tens of thousands of machines running non-stop. So, there are some concerns too, like ecological concern. Let's say, Bitcoin consumes so much electricity, it's bad for environment. Yes, it does consume a lot of electricity, but how much electricity do the banks consume, or the offices with current financial situation, right? The printing press, how much does that consume? That one thing. And the other thing is that Bitcoin miners can be installed in any location where is the internet and electricity. So there are a few examples when Bitcoin mining facility was basically arranged in the middle of nowhere. So the solar grid or some other source of power was installed there. Usually it's renewable energy because right now renewable thing is very popular. So solar, wind, or geothermal was built around it, and then the Bitcoin facility was there to consume this electricity. And then around this facility, there were some workers who were building it, who are maintaining the mining of Bitcoin. So at some point, the Bitcoin, I think, is rather good for developing countries because it helps to grow the infrastructure around. And then if the electricity becomes too expensive for the miners, they can always move, and then the electricity stays for the development, for the people who were living around it. Also, one interesting thing, let's say in Texas, there are Bitcoin is a huge customer of the local power plant. And Bitcoin is unique because when Texans were low on electricity, the power supplier just called the Bitcoin miners and they said, we're about to experience outages because it's too hot. People are running their ACs on the maximum capacity. Could you please shut down your miners for now? Otherwise, we'll just have a complete outage in this area. And the miners can do it, right? It's not a hospital. It's not something which you cannot stop. You can stop it, and then they stopped it, so everyone else had the power. So there you have it, right? There are some people who talk about it, they don't even know what they're talking about most of the time, right? It's not even only about Bitcoin. That's just how it is, it is what it is, as they say. So last thought, Bitcoin is usually called gold 2.0 or digital gold. Why is that? Because gold and Bitcoin has many features in common, right? It's finite, it's predictable, the amount of Bitcoin and the amount of gold which will be found. By the way, Bitcoin is more precise because if every single person right now on the earth will go ahead and start mining the gold, then the production of gold will increase. But if every single computer on the planet will start mining Bitcoin, it will have a little bit of an edge for the next 2 weeks, but once the difficulty is adjusted, then it will be one, block every 10 minutes. So it's easier to predict the inflation of Bitcoin. It's we know it's finite. With the gold, it is finite too, but there might be gold somewhere in the space or something like that. Bitcoin, it does not exist in space. Also, it's easier to send, easier to divide, easier to transfer, and all the other benefits. So I think that digital gold will dwarf the analog gold, because every digital thing usually dwarfs the analog thing. Think about like analog movies, like you would borrow the DVD or video cassette, VHS, and what was the scale of that, and now when you can just subscribe to a service and or rent the movie, it's just absolutely different outreach. So the same will happen with the digital gold, with the Bitcoin. And if the market capitalization of Bitcoin meets the market capitalization of the gold, every single Bitcoin will cost approximately $500,000 at the current price of gold. But I think it will surpass it and go further, because again, digital items are usually bigger than analog ones. Well, if you like the content, please like the video and write me in the comment what else do you want me to explain. I will be there for you. Take care. Don't take more risk than you can afford. See you. Bye.